Welcome to the Trading Market Technicals Morning Call video for Friday, January 24th. Right across the board, Dow Jones down 175, NASDAQ down 24, S&P down 16, Russell down 8. Interesting developments, as we know, yesterday morning I mentioned China PMI came out worse than expected, so they're showing that the economy is contracting. Markets don't like that. They actually sold off in the pre-market and followed through pretty much most of the day. We do have some developments though, but I want to show you, we're going to go through some indicators, go through our indices, and of course some sector charts like we always do, but it's all about the yen, guys. And I've been saying that for quite some time. Even if you're not a currency trader, you need to know what the currency markets are doing because they will affect our markets here in the U.S. Right now I have an overlay. I have the Japanese yen and the E-mini S&P contract. As you can see, further weakness developing. We're down 775. We just ticked lower. Why? Because the yen just ticked higher. Okay, there's three technically safe haven currencies, which is one, of course, the U.S. dollar, two, the Swiss franc, which is now pegged to the euro, so really that goes away. And the last is the Japanese yen. Don't ask me why they think that that is a currency of a safe haven. I have no idea, but unfortunately, it's all about the yen. Now, when the yen rallies, the markets get under pressure, and as you can see, that's what's happening here. Okay, we've had a wishy-washy start of the new year, as you all know. Markets were pretty calm, not doing much of anything. We had one down day, a couple of up days, and then we had some pretty much sideways consolidation. I said energy is building. Now, yesterday is one day, so it really doesn't make we've done a little bit of technical damage. Yes, we did have distribution. We had a lot of volume on a down day. Marks a distribution day. Today's going to be really critical. And yesterday, looking through a lot of charts, yeah, there were some risk-off sectors. There were money flowing out of the higher sectors that are interest-sensitive, sectors that follow the markets closely with risk on. Risk off. So yeah, they have gotten hit. Obviously, markets were coming out of a decent kind of a consolidation area, now starting to really develop. Now, well, I'm not going to get overly excited about the downside as of yet because, as you know, this market has been bid up, well bid up, and we are still in a bull market, and I'll show that to you in the charts. But we have to use caution here because now we're at a point where the markets can easily start to sell off, and then we're going to start looking to start selling rallies, and that's what I'm waiting for today to see what happens. And remember, guys, for the new traders that has started or the novice that's just trying to make a living and start making money. If the volatility, which is not the good volatility that we're looking for, but if it's something that you can't handle, step aside. There's no reason why you have to be involved in the markets every day. Me personally, for days like yesterday and whatever, I prefer to step aside and start grabbing a list of longs and shorts to see what's going on and look for quality setups. One or two trades possibly, and even if you don't do any trades, right now it's protection time for your assets, for your money in your trading account, right? That's what we always look to do, is protect our profits. So that's what we should be doing until we really get an idea. Okay, is the market going to head lower, or is the market indeed going to start moving higher again? And that's what we don't know. We're looking for any type of clues. But remember, getting back to that, it's all about the yen. As you can see here, I just wanted to overlay 2:30 in the morning Eastern time. We had the yen start to pop up. We're still basing, boom, 3:30 we start to sell off. And the yen is actually getting stronger and stronger and stronger. And if you can see, and I just wanted to see if I can, here we go. Okay, I missed the yen. All right, so I took the yen out. But anyway, the point I was trying to make is that if the yen has been, actually has been in a downtrend for quite some time, has broken the bearish symmetry. Now, with that being said, do we rally higher and we're in a bull market in the end? No, I definitely don't think so. I think that that's why I think the downside in equities is going to be short-lived, because if in fact the relationship remains the same, we have the Japanese government, the Bank of Japan, intervening with their currency, devaluing their currency, and that's why it's only a matter of time, which will actually create a shorting opportunity in the Japanese yen. And if you want to look at that, you can look at the ETF via the FXY. So I think it is short-lived, and I think it's going to create a buying opportunity in equities and a shorting opportunity in the yen. Okay. Now let's take a look at the ES. And as you can see in the ES, I had 1838, I had 1820. We have now broken below the 1820 mark. Okay. Now I like to see a 2-day close below certain areas of key pivotal supports or resistance for that matter. But I want to see what happens today. Now, if in fact we do sell off today, then next week we'll probably set the tone for selling rallies. Okay, and then what do I mean by that? Probably, well, we want to see buyers of dips come in. If they come in and they get burned, then I think that pretty much all bets are off, because everybody looking in this area are absolutely long up in these areas here. So this is a 1-hour chart. Remember, everybody accumulating buying dips here, 1809. That is going to be really the line in the sand. It's right here. It's 1809 to 1800. That is going to be a real critical area for the ES, okay? Because this is going to act as a pivotal low here, and then of course that round lot number of 1800, 1797 in this area here, that's going to be the ultimate line in the sand. If we take that 1800 out psychologically, I think you'll get a flush back into these Fibonacci numbers here at 1782 and 1777. Okay, and if you looked at it, and I showed you, I don't have it today, but you'll see that it is still bullish even if you got to this point. That's why I wouldn't be looking to aggressively short the market. If you're looking for some key stocks that are really getting taken to the woodshed, came out with some bad earnings, they're going to be flushed. They're the ones you want to look for. Bad news, a pre-earning announcement that came out worse than expected. Those are the ones that you want to look to sell, because you have the market on your side now, right? You have weakness coming in the market, and market participants will dump what's not working, and that's what you want to look for to get short, not the market in itself. The market is always a hard short the last year or 2 years. So, for protection, absolutely. Okay, so as you can see, we broke one spot, and we are down below the 20-day moving average. Now, here's the daily chart. We broke below the 20, and now we're at the 50-day moving average in the ES, and we're holding this long-term trend line from this pivotal low of October 9th. Okay, we have 3 trend lines here. As you can see, the 8 has already rolled over, the 20 is rolling over, and now the 50, not quite, 200, it's like moving a ship. So we are still bullish. We have still bullish symmetry. Bull flag, bull flag, bull flag. We move down, caught that trend line. So this trend line support is valid. And then we need to see another close below. Then I think that you're going to have further weakness here. And again, a 10% correction is really not out of the cards. We haven't had a 10% correction, I think, in over like 550 days. I saw it on the internet. It was pretty crazy. So that would be healthy, would set up a big buying opportunity, okay? But remember, it doesn't have to happen. So just keep this in mind. But we are breaking some areas here, which is a concern. Now, if we close below this trend line today, and we close below the 20 again, and now the 50, that is definitely a warning sign. Okay, and if you are holding a large portfolio of longs, I would start looking to either tighten up stops, or if you want to ride through the storm, definitely look to buy some protection, because protection is not getting is now getting expensive because we have the VIX moving up higher. Okay, so now let's get into. Let me just move this out of the way here, and I want to go into our indices, and you can see here we have the spiders. Close below the 20. Now, obviously, the logical spot's going to be the 50-day moving average. Let's see what happens today. If we do take that out, then obviously the next step is going to be this trend line area here, which would come in right around 179-ish, okay? So again, break below the 20, not good, not a good sign. And if we do take that out again and we stay below 20, Monday's going to be the do-or-die situation here to see what happens with the equity markets. But again, guys, we're still in higher highs and higher lows. We still have bullish symmetry in the market, so I wouldn't get too aggressive as of yet to the downside. Okay, the diamonds already reached the 50-day moving average. Definitely the weakest indice of the 5 that we follow, and it is a follower, so really not too much. But what's really encouraging to me is that the transportation sector made new highs. And that's pretty amazing stuff. And he's like, wow, now the transport's our leader making new highs here. That's something that we gotta watch. And remember, we like to get aggressive when everything lines up in all the ducks line up in a row. This is not the case at the moment. Okay, we have the leader making new highs here, and we have the Russell at its or near its highs and still above the 20-day moving average. So it's a little bit of a mixed bag. That's why I don't like getting too aggressive right at the moment until we know for sure that everything is starting to break down and everything's starting to follow suit here. Now, one thing I wanted to show you before I get into, I wanted to show you just a couple of things. And I ran right into the indices, but I wanted to show you because I really wanted to get my point out with the indices. So now, and here's the Qs. Now the Qs with the with technology is also holding up well. So you have three leaders doing quite well, and you have the Dow and S&P really taking it on the chin here. So let's see if they bring down the markets, and really they're followers. So I don't think that's the case. Okay. So before I get into the sectors, I want to go back and I want to show you what is a concern. Now we did say the bullish percent, and I mentioned to you before yesterday. As we get separated from the average, the moving average, the 8, and this starts to separate and really starts to dump. As you know, like I mentioned before, it's a very reliable indicator, guys. It starts to cross when the markets are still hanging in there. So now this is a pure-fledged sell signal, and this is something that we need to really watch here. As you can see, this market could gain momentum to the downside, and we could really go into a full-blown correction as soon as you know it. All right, New York Stock Exchange, new lows. Also like turning a ship. As you can see here, we actually ticked lower. So pretty amazing, right? Okay, well, shouldn't this be up? Obviously, I would think so if the market was down 176 Dow points. But nonetheless, it has not broken out yet, okay? So that's something also a little bit in the bull camp, okay? The U.S. stock, well, let's talk about the stocks over the 50-day moving average. It has now broken down. And we are in this symmetrical triangle. We are in the apex of the triangle. As you can see, again, I'm like a broken record, but I want to just continue to get my point across here that we are at these levels that we are ready to break down. And when the market does turn and the market goes into a correction, there's plenty of opportunities. That's why right now it's very difficult to say that, oh, we have topped and we're topping is a process. It's not like a bottom where you get these V-shaped bottoms. Totally different. So that's why it takes a little bit longer for a top to really be formed and be identified. And there's plenty of opportunity to get short the market. So even if you step aside for a couple of days, let that bad volatility kind of go away, and then you can really get short some good quality names that are really taking on the chin and ride that for days. Okay, so now New York Stock Exchange, new highs, new lows, still above zero, but look what's happening here, right? Lower low, lower low. This trend line, you can see a trend line forming here of lower lows and lower highs. So this here needs to be watched closely as well. Now, in all of these indicators will just give you an indication that maybe the market has topped, and that's what I'm trying to get my point out for tonight. All right, TLT bonds. Bonds are exploding, and that's where the money is flowing into bonds. I think bonds are going to do quite well this year. I hate to say it, but I do think bonds will I don't know about outperforming the market, but definitely will be up there. As you know, a lot of the money are coming out of the indexes and going into bonds, now hitting the 200-day moving average, and we're at the 20-day high. So logical price. 20-day highs, 200-day moving average, and of course we are at a double top here, so logical area for a pullback. Let's see if it flags, because if it does flag and makes a higher low off this low here, then obviously that will create a buying opportunity and easy to manage. Okay, now let's get right into the precious. Let's go into the U.S. dollar first, and then we'll go into precious metals. U.S. dollar. U.S. dollar again took it on the chin. Why? Yen strength. When the yen is strengthening, the U.S. dollar will get weak. Again, dollar-yen. You can look at that pair as well. So this is telling me exactly what I need to know and what I am anticipating. Dollar strength, strength in the yen, dollar weakness. Bottom line here, guys. That just confirms what I just showed you on the yen. Okay, now let's go into the emerging markets. Another big concern. Emerging markets are really getting hit. Now, obviously, we had the HSBC Flash PMI, China PMI showed contraction, so the emerging markets will get hit harder than our markets. But yes, we are now broke below the descending triangle. Not a good sign, at least for the moment, for the short term. FXE, China. Well, obviously, we knew China was going to get hit overnight, and look what happened. We took out this 36 area. Really, really not a good sign here. So let's see how much downside we have. And to me, taking out this pivotal support, your next area is going to be these pivotal lows here, this low, and then this low, and then of course you got this gap area of support, which come in around 32. So let's keep an eye on this ETF. This will give you clues of what's happening. Remember, we are in a worldwide market now. Hate to say it, but if something happens in Europe, we're going to feel it in our opening. If something happens overnight, Europe will feel it, and then of course our markets will feel it. And then by that time, sometimes you get a reprieve, and the markets actually turn around and go higher. But something to think about here. Take a look at gold. Now, gold is interesting, right? I've been saying I'm a buyer of gold. I'd be buying gold here. I'm talking about more of a position trade in gold. Inverted head and shoulders. We had this downtrend channel, right? Broke bearish symmetry of lower lows and lower highs, now making higher highs and higher lows in a bull flag pattern. A stair-step pattern is exactly what you want to see. We pull back into another bull flag, and boom, we exploded out of this inverted head and shoulders pattern. Now, we're down about 240 right now in the pre-market session, but again, this is what I like to see for a short-term hold, couple of weeks, 2 to 3 weeks. We come into a slight seasonal strength going into February, and then the metal gets weak again before the summer. But I like to see this here. Maybe it gets up to these areas here, 1300, 13 and a quarter. But again, looking really constructive. Now, silver, on the other hand, is a little more volatile, but it is still trying to carve a bottom here. Now, we did have a big move in silver, but it actually gave back half of its gains, still closing in okay, and we're down about 3-4 cents in silver. So silver here, still constructive, still okay, and still I'm looking to carve out a bottom. Now, I like to see silver kind of explode. Once you get that explosive move out of here, 1 or 2 days, that'll be your area to start taking some profits right around 21.50. Let's see if that happens, okay? All right, so now let's get into the sector charts real quick. As you can see here, GLD, same thing. We broke out of the pattern. Now let's see if it has some legs to move up to the 126 area, okay? USO, right now, no trade for me. I'd like to see the next. I'm going to be setting up the next pullback into USO. Easy to manage. Your stop will be below this low here. So I'm watching USO for the next pullback, which would be gold. Now, as you can see, there are some bright spots, and one of them is the home builders. As you know, I'm very bullish home builders for 2014. Beautiful, beautiful downtrend channel, broke out of it, the XHB yesterday. Take a look at some of the other other stocks in that ETF. Lennar, boom, out of this channel, okay? Now take a look at Pulte Homes. Same thing, Pulte Homes, out of this channel. Really, really nice. And this is something, if you're looking for some strength, go and take a look at some of the ETFs, follow them, see what they're doing. If they're up on a down day, money's flowing into that ETF, hence the home builders. So this is another perfect setup. If you're looking to accumulate, I'd be looking to accumulate the home builders. Look at KBH. KBH was down in early morning session and now rallied, and now looking for a breakout here. The first breakout is, you could take that first breakout, but usually on the first breakout, we do get a little bit of a back test. That's really where you want to start to buy, is that next back test. That'll give you confirmation of this base pattern here, okay? Now, obviously, the banks took it on the chin. Another one of my favorite sectors is the banks, and you could start looking to accumulate the banks on weakness. Okay, now obviously we don't want to catch a falling knife. Let's wait and see if it could base a little bit and then start to break out. Now, the XLF is at its 50-day moving average already, so the next area would be this 2012 downtrend line. Okay, so let's just keep an eye on. We don't have to obviously start getting aggressive right now looking to buy banks. Now, Citibank, same thing. Citibank, I thought was going to be a little bit more of a little more strength, but when it reported earnings, I still think it's going to be a good buy here. We're above the 20. We did break the 50. So now, if you're not long Citibank, I would not be adding to it. I'd be managing it, and I would not be buying it right now. I'd be waiting for some sort of a base pattern here, and then a back move higher above this triangle would be the buy signal here in Citibank. JP Morgan, same thing. Now, JP Morgan, it looks like it's actually making some sort of a head and shoulders pattern with the right shoulder still need to be formed, but if you see the head, left shoulder, here's your neckline right here, and then let's see if we get a bounce and then form that right shoulder. Either we take out or we start to break lower again. So JP Morgan, a little more sloppy, and I didn't like it. I liked it here, and I liked it here. But now, since we have this sloppy pattern here, I'm still watching it for an entry, but it's going to take a little time for JP Morgan. And then Goldman Sachs here. I like Goldman Sachs even better because it's actually just kind of breaking down slowly, low volume as you can see here. And then let's see where it bases, and then that'll be a buying opportunity eventually at one point. But also now the bank's going to need some work. And here's Apple. Apple higher on Carl Icahn continues to tweet that he has more building a position in Apple. And it really just what kind of annoys me is that why would he do that if wouldn't you want to be buying into weakness? It just doesn't make any sense to me. It's just a bunch of nonsense, tweeting out his position, and that should be outlawed. But anyway, and there's Apple. Okay, guys, long video. I apologize, but I wanted to get some key points across. Let's see what happens. It's going to be really important today, and then that I think would set the tone going into next week and going into February, and see if we get that pullback that we're looking for. All right, guys, have a great day. We'll speak to you on Monday. Enjoy the weekend.